Welcome to this week's Forex Trading Tips. This week reflects the Commodities and Futures Trading Commission Commitment of Traders report dated 26th of the 11th. That is the Tuesday, and of course the report wasn't published until the following Monday because of the Thanksgiving holiday. This week we will be looking at our two trades as well as three currencies. The first currency we are looking at this week is the Canadian dollar. As you can see, there has been a decrease in open interest, but more significantly, quite a drop in short contracts held by the commercials. They've dropped 10,500 contracts, short contracts of course, and the non-commercials have dropped 4,000 long contracts, adding to the short side by about the equal number of contracts, 4,411. In spite of this, the commercials still hold nearly 60% of their position as on the short side and 40% on the long side, so this remains significant. More importantly, because the non-commercials, the speculators, are now adding to their short position, this could actually point to a change in direction and a trend forming to the short side for the Canadian dollar. The retail traders still hold most of their positions on the long side, holding 35,000 contracts long and only 23,000 short. Again, as we all know, the retail traders are consistently wrong. We'll be having our chart of the New Zealand dollar, Canadian dollar at the end of this report on the three currencies, and it's probably worth looking at. We're actually going to hold our position on the New Zealand dollar, Canadian dollar. The next currency we are reviewing is the New Zealand dollar. As you can see, there's been very little change in commercial positions, and they still hold 80% of their positions to the long side and 25% or 26% to the short side. This is a significant divergence and points to continuing improvement in the New Zealand dollar, US dollar, and we expect it to continue going north. We also expect the New Zealand dollar to increase in value when compared to the Canadian dollar. In short, this CFTC report simply confirms our view, and we intend to hold our position in both these trades. There is no reason at this stage to alter our minds at all about this currency. Our final currency of interest this week is the Swiss franc. We're not trading this currency yet, but this is the one we're watching. As you can see, the commercials have added 4,800 long contracts and maintained their position on the short side. This gives them a contract size in percentage terms on the long side of 67.7% and on the short side of 23.4%. Again, it's trading in a mid-range position against the US dollar, so we don't believe that it's time to jump in yet. There has been a nice move of the Swiss franc gaining in value against the Canadian dollar, and it's a CAD Swiss franc pair, so the pair index is dropping, and people that joined this trade would have made a nice profit, though of course, as you know, this is not the way we trade. However, this is the currency that we will be watching. We don't think it's time to start trading this currency yet, as it's only 68%. We prefer to wait for the franc to get into the high 70s or early 80s. However, once again, this is the currency we will be watching. Our first chart this week is the New Zealand dollar, Canadian dollar. This time, for a bit of fun, we have included a Renko chart rather than the normal candlestick. As you can see, our entry point on the 16th of September, and we see a nice move up now. These candles on the TradingView charts are the size defined by the average true range, so each brick size is a little bit different. This brick size on the New Zealand dollar, Canadian dollar is about 50 pips. So we've made a reasonable profit at this stage, but we will hang on. We've included a 10 brick moving average, and as you can see, once the bricks are outside the moving average, a trend tends to continue. This is really just for a bit of fun, but it does help us stay in the trade, and we can see that things are going well. Some people might be inclined to take profit at this stage, and that's an individual decision, and there is quite a bit of profit to be had as of this moment with about 350 pips. We'll be hanging on, but we have moved our stop to preserve a 200 pip profit. A second chart this week is the New Zealand dollar US dollar. As you can see, it's moving into profit, and we've moved our stop to protect our profit. Again, this is a Renko chart. Again, the brick size is about 50 because of the low volatility of this pair. If you're looking at the GBP NZD, which moves about 150 pips a day, the brick size reflects that, calculated from the average true range. So the brick size in the GBP New Zealand dollar is about 150 pips, whereas in these lower volatility pairs, it's only about 50 pips. Having said that, we're still in profit and moving north. Again, we have the 10 moving average, and the bricks have moved to the outside of the moving average, and the moving average has turned up. This is probably irrelevant and just a bit of fun, but it does encourage us to stay in the trade. Once again, we have moved our stop to protect profits, so we're in a no-lose situation, but we've given it plenty of room to move, or room to breathe, as they say. We have no intention of abandoning this trade as of yet, but we will let the market move, and we monitor these trades daily. That's basically it for this week. As you can see, our trades are moving nicely into profit. We expect them to continue moving north. Of course, we expect retracements in all these moves, but we think the trend has changed in both these pairs. We look forward to being with you again next week for more tips based on the CFTC Commitment of Traders report.